Alcoa report earnings. When was that? Tuesday night. And so they're traditionally the company that almost unofficially kicks off the earnings season for whatever reason. I'm not sure why that is, actually. I think just historical reasons that I'm not aware of anyway. Whenever Alcoa report their earnings, that's it, right? Earnings season is off and running. We talk a lot, mostly, in fact almost entirely, about macro. That is factors that are impacting the whole economy. It's very much top-down economic factors, and which normally, and let me switch to, let's say, the S&P 500 index chart here. Obviously, from an index point of view, mostly this market is going to be affected by those top-down macroeconomic factors. Mostly. It's certainly not always the case. Every now and then, of course, we get what we would describe as micro factors coming in and having an impact on the whole of the equity index. Obviously, in this index here, the S&P 500, you've got 500 companies. It's actually, I think officially it's 505, isn't it, Ben? Anyway, we call it the S&P 500. And I'm going to just show you, actually, I'm going to switch my screenshot. Here's a graphic which is looking at how this index breaks down, and this is something you've got to be aware of, right? It's what companies are in this index, and is this index particularly overweight any particular sector? The thing about the S&P 500, it's obviously a huge index. It's the biggest index in the world, of course. It's the 500 biggest companies by market cap. Not only are they the biggest companies in the world, but of course there's 500 of them in one index. I mean, think about the other national indices, like the FTSE 100. Well, there's obviously only 100 companies in that. The DAX 30, the Nikkei 225, all of these numbers are obviously a lot lower than 500. So firstly, the thing about the S&P is it's a huge index, and it's got large representation right across the sectors. However, looking on this pie chart on the right-hand side, we do have certain sectors that are considerably better represented than others. So 20.4% of the S&P 500, just over 100 companies in that index are technology sector companies. The next biggest is financials, coming in at 16.5%. Actually, if you looked at this pie chart, if you rewound 10 years and went back to pre-crisis, then actually it was the financial sector that was comfortably the biggest sector in this index. The financials got up to 23-24% of the whole index. Obviously, they got killed in the crisis, and then we've had obviously a more longer-term growth in the tech sector. So what you've got now is they've swapped positions. But look, healthcare is very well represented, 14.7%. Consumer discretionaries, 13.1%. Industrials, 10.1%. Consumer staples, 9.9%. So look, you got 6 of the large, broad sectors that have basically at least 10% representation of the index. Then you got energies, utilities, materials, and the least is being telecommunications. The point about this is, when you're considering, is one company's earnings report going to have an effect on the whole index? Well, you've got to know who's in the index. Today, we've got financials reporting. We've got the three big guns. Actually, if you take Bank of America out of the equation, you've got the biggest 3 banks in America, okay? Bank of America would be right up in that kind of top 4. They're reporting their earnings next week. So what's important when you're trying to think about, is one company's earnings report going to impact the whole index? Well, firstly, you want to look towards the first company reporting from their sector, okay? Because what's going to happen is, as Wells Fargo become the first financial to report their earnings today, what people are going to do is they're going to take Wells Fargo's earnings and they're going to extrapolate that and say, right, well, that bank achieved this performance in that quarter. And what analysts will do and traders will do is say, well, that's obviously a clear guide as to how all the other banks performed. If Wells Fargo's numbers are really bad, well, then we can make the assumption that other banks' earnings are going to be really bad. And so actually what happens is not only is Wells Fargo's share price affected, but actually the whole of the financial sector share prices can be affected. So if that sector then also carries a large proportion of the index, well then right, actually the whole index can be affected. So what you want particularly to look for any kind of scope for the whole index to move off one company's earnings, you want to look for the first company to report from each sector and the first company to report from the big sectors. All right, so certainly the technology sector and the financials for sure, and healthcare and so on. All right, so the first company to report are key. That information can have a large impact on all the companies in that whole sector. That's one thing. The other thing to say is, well, right, forget about the sectors. Who are the big individual companies? And this is what we got on the left-hand chart here. Here we've got the top 10 biggest companies in the index. Okay, so Apple are top, then you've got Microsoft, then you've got Exxon, then you've got Johnson & Johnson, General Electric, Berkshire Hathaway, and so on. The list goes down. So you've got two of the big banks here reporting today are in the top 10. So not only are we getting two big financials, you're also getting two of the top 10 report on the same day. So what I would say is, today, yes, financials, yes, their earnings reports can have an impact on the whole of the S&P index. Okay, it can be, if you're only trading the S&P index, then I'd say today's data might be significant enough to shift the whole index. What happens is, the thing about these earnings, the earnings season, it lasts like 3 to 4 weeks. Okay. Obviously, the further we get into the season, well, then actually the less impact any one company is going to have on an index, because they're not going to be the first. You know, we have the first company from each sector reporting, obviously, up front at the start of the earnings season. So when you get a financial company reporting their earnings in 2 weeks' time, that earnings report is not going to have an effect on the index. We've already got a pretty clear idea as to how the financials have got on generally, and so just one more company's information being added to that isn't necessarily going to have an effect. Okay. The other thing, outside of, right, who are the biggest companies in the index? Right, who are the big sectors, and when are the first companies in that sector going to report? Outside of that, you then have other like one-off situations. So it might be the scenario that this earnings season there's a few companies in particular that we are incredibly interested to hear about their performance. Can any of you give me an example? Type in the room. What company has been in the news? What company particularly might you be interested to see more than most? Why might you be interested to see their earnings? Can anybody think of any companies that you would want to get their numbers on? So Rishi, absolutely, in the live room. Fez in the live room, yes, correct. Tunde in the advanced room, absolutely. Chris, big time. Anybody in the new room? Come on, Love It Lane. Give me some ideas. Thank you, Carlo. Absolutely. Yeah. All right. Good. So you guys have, amongst a lot of you, you kind of got most of them. So the ones I'd be interested in, absolutely 100% top of my list, is Deutsche Bank. Now, obviously they have been in the news would be an understatement. But the point is that this is such a huge systemic risk that anything Deutsche very much has the significance of shifting not only the DAX but the entire globe's equity space. So definitely Deutsche specifically would be top of my list. Now, with regards to Deutsche, their earnings report is on the 27th of October. So that's definitely one to mark off in your calendar. We want to see how they're doing. The other one, Samsung, some of you are pointing out, absolutely. Samsung have had a shocker. They've really properly shot themselves in the foot. Or, well, maybe blown up their right ear. Might be a better one. In fact, they then pretty much blew up their left ear as well. And have now completely withdrawn their Samsung 7 product. Is that the name of it? That's not the name of it. Notebook 7. Thank you, Ben. So that's that. How impactful has that been on their earnings? Then you might want to look for Apple. 2 reasons. Firstly, have Apple benefited from Samsung's demise, and if so, by how much? But then secondly, don't forget and don't get too excited. The thing about Apple is they've literally had a new product launch like just now. So, in fact, Anthony, when was the launch date?
Apple.
Yeah. Mid-September?
Yeah.
So look, it was mid-September, okay? The thing about that is it's right at the end of quarter 3. So they literally had like a couple of weeks. So we're just going to, with Apple's earnings, we're just going to catch the very beginning of their new product. It's really quarter 4 for them. That is the key. Going into the holiday season, I don't know if anybody's walked up Regent Street in the last couple of days. But if you have, then you will now see the grand unveiling of the new the European flagship Apple store on Regent Street. It's been shut for the last couple of months, and it's now open. They've revamped it. The point being is it's only opening now, even though they launched their product in September. They're actually only opening the retail shop or reopening it now, because for them this is the point in the year where they see their revenue step seriously higher. So, you would just catch the edge of their new product launch, but it'll be quarter 4 that's more interesting for Apple, I would say. But anyway, look, these are the companies that we're specifically looking out for. And then Wells Fargo, a couple of you mentioned, of course. So,
I was going to say, it's the front running of bad news.
Yeah.
Samsung have already issued a profit warning.
Yeah.
So that whole kind of management that companies do.
So Ant's making a good point here. All these companies I've mentioned obviously have been in the news globally for bad reasons. What a company, what their management team and board will be doing, it's very much all about managing expectations with these earnings numbers. It's very much about managing expectations. And if you've been in the news, like Samsung have, as Ant's quite rightly just mentioned to me, have already issued a profit warning. So this was on Wednesday earlier this week. They cut their third quarter operating profit estimates by $2.3 billion. So that's their kind of estimate on the damage done on their top line as a result of this disaster with their Galaxy Note 7. So Samsung aren't waiting for their quarter 3 earnings announcement to then quantify the bad news. They're absolutely getting out in front of that and communicating to set expectations. Obviously, their share price got hammered off the back of that news on Wednesday. It was already heavily down, of course, but and yeah, the same with Deutsche as well. It's very much about getting in front of the uncertainty in the rumor mill, and if these companies have had a bad quarter, this is why you've heard the terminology of issuing a profit warning. Well, this is what it is. It's not waiting till your officially scheduled earnings announcement. You're issuing profit warnings as soon as you've got hard evidence that your profits are going to be a lot lower than what you guided us to believe 3 months ago. Because this is the key about these earnings reports that get delivered. It's not just about the backwards looking view. How did we as a company get on in quarter three? A key part of this is also the forecast, the forward-looking guidance that these companies give us for the quarter next. And this will be important for Apple particularly. What's Apple's quarter four guidance going into holiday season with, how confident are they that this iPhone 7 is going to do the business? So it's definitely about forward-looking guidance that's key. So Samsung, when they delivered their quarter two earnings, of course, gave us a forward guidance on what they estimated revenue would be in quarter three. It's just that as we've gone through quarter three, they've had this absolute unforeseen disaster. So now their earnings are going to be way lower than what they guided us to expect 3 months ago. So they're right out in front of that, and they're, as soon as they've got hard evidence they're going to underperform, then you need to communicate that ASAP. Get the damage done, and then it's about beginning the process of managing your shareholders and being seen to be doing the right things. Although Samsung obviously recalled some of the Galaxy 7 products, and then were making modifications and sending out new ones, but obviously those blew up as well. So you could say the management handling this has been a disaster, and now they've made the almost unprecedented move of just removing the entire product from the industry. So it literally couldn't have been much worse. But anyway, that's just thinking about companies, and Wells Fargo are in this category, of course. Companies that have been in the news for very negative reasons, and Wells Fargo are certainly in that bracket. It's definitely Deutsche, Samsung, Wells Fargo are the three that immediately spring to mind, and that very nicely includes the US, Europe, and Asia. So you've got a global situation here. All right, let's talk specifically about what information flow do we get. So I'm going to switch my screenshot here. This is what, and in fact, actually, before I look at today's numbers, couple of websites for you. Firstly, when are companies reporting their earnings? Because this thing lasts a few weeks. Generally speaking, as Ant was saying in the room there, generally speaking, you get the banks kind of front-loading this season. So you tend to get the banks reporting first, then you get the big tech names right up front at the start. So next week we'll get the likes of IBM and Intel and Google, for example. Then you tend to then get the retail guys, and then energy and so on, right? But certainly banks and tech are kind of up front and sort of front load the first week or two. But look on the here's a website. If you just Google Bloomberg earnings calendar, this is what you'll get. And on here, what you can do is just select a date. So, let's select today. And so this is all the earnings that are happening today, although now I'm looking at that. Oh, hang on, I'm looking at Germany here. Sorry, so you can select the country you want. So select the US, for example, and then today's date. And the thing about this is there is a huge number of companies reporting. Look, I'm going to scroll down here. All of these companies are reporting today. I don't know, there's like 50 different companies. So the point is, though, almost all of them are irrelevant when you're trading the index. Obviously, if you're trading, I don't know, let's say you owned Access National Corp shares. Well, obviously, Access National Corp's earnings are very important to you. If you don't own their shares, these earnings are basically irrelevant because they're not a big enough company to have any kind of impact on the whole of the index, right? So most of these companies reporting today, you can basically entirely ignore. It's just about sifting through and picking the big ones. And we know that the banks are the big ones. So your JP Morgans. And if you have a look, you can click on their name and it just gives you some broad top level kind of information about this company. And you can get a look at their share price and how it's performed today. So into the earnings numbers, well, this is yesterday, I guess. JP Morgan's share price drifted marginally higher. If you look out over the last month, it's been relatively a positive month. Bit of a dip here, I would say, just over the last couple of days, apart from yesterday. If you look over the last 1 year, well, actually, JP Morgan this week made a new high for the year. So actually, JP Morgan shares have definitely been outperforming. If you look over a 5-year time frame, also right up here on the highest price points we've seen, really since the crisis for JP Morgan. Okay, so you've got to bear in mind where their share price is. Really, we're pricing in good news here, you might say. To get a feel for, so you just got to scroll down, and we'll be communicating to you who are the biggest companies that we want to be looking at. So Citigroup, obviously. And then, of course, Wells Fargo down the bottom. These are the three today that are interesting. We've got, I'm going to leave it at that. They're the three we're going to be looking at. Okay, so this is a good site to look at in terms of who's reporting when. If you want some information about what to expect in these reports, well, then there's another good website here. I'm going to post the URL into the room. So it's called celeritycorp.com. And what you've got on here are earnings preview reports for all of the big US companies. So go on to, this is the homepage I'm showing you, just scroll down. They tend to issue these earnings previews a few days before the respective earnings release. So today they've released Goldman Sachs, this is yesterday. They released their Goldman Sachs preview, they released their Bank of America preview. These earnings are coming next week. Okay, Morgan Stanley as well in here, and eBay and so on. I'm going to scroll down. If you scroll down a bit, you'll find today's reports. So we've got Citigroup, we've got JP Morgan, we've got Wells Fargo. So if you click on any one of these tabs, then you go through to actually a pretty detailed overview of the company and what to expect. So what we have here is that their earnings is scheduled to be released approximately at 8 a.m. Eastern time. So that's 1 p.m. here. Now, one thing to note, the timings of these, emphasis on the word approximately. This is not like an economic data release, retail sales, 1:30 p.m. precisely. This is approximately 1 p.m. We're going to get the Wells Fargo numbers. It might come slightly earlier. It might come slightly later. So this isn't an accurate timing like it is for economic data, okay? Because of that, because we're not quite sure precisely when it's going to hit, there's something on Twitter you can do. Is follow these guys. So that website I was telling you about, Celerity, if you follow them on Twitter, so @Celerity is their handle. Let me put that in the room. Then these guys, generally speaking, according to my Twitter guru, Anthony Chung, generally speaking, you'll get earnings news from this Twitter feed before anywhere else, basically. This is where you're going to get it first, okay? Obviously, the Squawk will squawk this. Obviously, this news flow gets dumped down onto Bloomberg and Reuters and so on. But sometimes, basically what Celerity do, they've got an engine that scours about 1,000 different news services. And there have been instances in the past, and what was it, General Electric, did you say? Yeah, so General Electric a while back accidentally posted their earnings on one of their, was it on their website or on their own website by mistake early, and then realized the mistake and quickly withdrew the information, and it was only on the website for about a minute. But Celerity's scouring engine picked it up before they managed to delete it. So actually Celerity run with it was bad news, wasn't it? they got it like 3 minutes early before Bloomberg and the like picked it up when they officially announced it. So celerity on Twitter is what you need to be using. Get that on your tweet deck as we go through these earnings numbers. Right, this is where you're going to get the info first. So you need to be having a look at these reports, and I wouldn't, as earnings season goes on, less attention is going to be paid on these data points. They're not going to move the index, but up front here, they certainly can do. So have a look through these. What they've got, like on this table, for example, let me just make that a bit bigger. You're looking here at the past. How have they got on in the quarters over the last 3 years or so? Okay, so you can look at the kind of historical data and so on. Hang on, let me just go back. So there's plenty of info here. And then, you're looking at you can scour through all of this. I'm not going to go through it in detail. There's also a technical chart on their share price and how that's performed, obviously, which is pretty interesting. Obviously, for Wells Fargo, it's been a disaster off the back of this scandal, and we made a new low for the year at the start of October. We have bounced a little bit. As I mentioned to you, Stumpf has gone. His replacements aren't necessarily quite what Wall Street wanted, but at least there has been a change. So there's a load of info here. Now, I'm just going to show you a different chart just to talk about what are the numbers we actually receive here. So we talk about earnings per share and we talk about revenue. These are the top line and the bottom line of the accounts for quarter 3. So what was their total sales, their total revenue, and then what was their profit per share on that revenue. So for example, down here at the bottom, we got Friday's earnings. Let's take, we're expecting to see, of the big banks, we're expecting to see JP Morgan report first, anticipated to be around 11:45. So what we've got here on these columns, we've got market cap. So how big are these companies, first and foremost? JP Morgan, 244.5 billion. That's the size of the company. With regards to their profit for quarter 3, we're expecting them to announce that they made a profit of $1.39 per share. So this is how they announce profit. It's not just a straight out figure in dollars, how much money did we make. They divide that by the number of shares in issuance. Okay, so this is why we call it earnings per share. So $1.39 is the forecasted figure. Okay. On the revenue side, we're expecting a revenue of $23.8 billion for that one quarter. Okay, so these are the main numbers that we're looking out for. Earnings per share and revenue. So it's just about, do they meet expectations or not? Do they beat expectations on the revenue side? Do they beat expectations on the earnings per share side? Obviously, in theory, if you beat your expectations, then your share price is going to go up. Obviously, in theory, the larger you beat expectations by, the more positive the share price reaction will be. The bigger the move in JP Morgan shares, the more likelihood it's going to have an impact on the whole index. The more likelihood it's going to have an impact on share prices right across the financial sector. And because the financial sector is such a large portion of the S&P index, you can then look for a real move on the whole index as well. Okay. Obviously, these numbers can go the other way and they can miss expectations. And so if their earnings per share and or revenues are below expectations, well then you're going to get share price decline and so on. All right. One thing to note on what perhaps might be interesting across this earnings season as a whole is what are these companies going to say about the dollar? Are they going to be suggesting that underperformance is as a result of an appreciating dollar? I've actually got a chart because you've already seen of the smaller companies that have reported already. There already does seem to be a pattern of underperformance being blamed on a strong dollar. But actually, if you look at the dollar index, I'm going to bring up a chart of the dollar index here. One sec. Where is it? Here we go. Here's the dollar index. Now, what we're looking for here, I mean, this is for quarter 3, right? So it's from July through till the end of September. This big move higher we've had in the dollar index actually came in October. That's Q4, so forget that. That's not in the equation here. Obviously, a lot of this move higher has been as a result of the pound, particularly collapsing. All right, so that's one thing to say. But actually, is the dollar more expensive in Q3? If you look at a weekly chart, just to take in the last couple of years, and this is the thing about earnings, we're not only looking to see, there's a lot of seasonality in these companies' revenues. So actually, it's more interesting to have a look at these companies on an annualized basis. So, for example, what was their Q3 revenue like in 2016 compared to Q3 revenue 2015? This then takes out any seasonality. But is it more expensive now in Q3 of this year than it was in Q3 of last year? And the answer to that is no, actually. It's not more expensive. And in fact, is the dollar more expensive in Q3 this year than it was in Q2 this year? And you know what? The answer to that is no as well. So if you're going to see companies blaming the strong dollar, they're lying. That's an excuse, I think, in my opinion. Now, it depends if a company is heavily exposed to the UK or heavily exposed to China, in which case, fine, all right, maybe they've got something to moan about. Obviously, the dollar has appreciated dramatically against the pound. The dollar is at a 6-year high against the yuan. So, for sure, any companies with revenue exposure to the UK and China have got an argument to say that the dollar has impacted their revenues negatively.
I've got an interesting chart.
Okay.
Just what you're saying.
Ant's going to just bring up a chart here on this topic of blaming it on the dollar.
And I guess it's factoring in what the market's already expecting. This is a few days old, but this was pre-Alcoa, so you'd already had 25 report.
Right.
This is what they've cited themselves as negatives, and it's over. US election is actually very small on the risk.
That's interesting.
In terms of corporates in the US on their outlook.
For Q3?
Yeah, or citing negative impact on their Q3 numbers of companies who had already reported at that point. These are all granted small, but...
Yeah. Okay, yeah, so this is interesting then. So that definitely the strong dollar, as you can see here, is absolutely number one in terms of factors to blame underperformance on. But as Ants just said, we're right at the very start of this earnings season. So hardly any companies have reported, and certainly none of the big companies. So this chart will be updated as we go through the season, and maybe it'll change, maybe it won't. We'll see. But yeah, as I said, any companies exposed to the UK or China particularly, then for sure they've got an argument to say that the strong dollar has certainly had a negative impact. What else? If you got any questions specifically, guys, get them in the room, please. So, just really to sum up then, unless any questions come in, and I'm absolutely happy to answer them. Just to kind of sum up, I guess, then, just thinking about today, back to that. So yeah, we got 30 minutes until the JP Morgan numbers. So it's about earnings per share, and we're forecasted 139. It's about revenue, we're forecasted at 23.8. Then it's about guidance going forwards. You know, what is their guidance? And with banks, it's about how much are they putting aside for litigation? It's core updates on their core tier 1 capital ratio. It's kind of these kind of things. But really, first and foremost, what's their profit? What's their revenue? And really, the share price will react to that to start with. All right. And if the numbers are dramatic, well, then yes, you can have an effect on the index. But I wouldn't be sat poised with let me switch my screenshot back to the charts. I would not be poised over my S&P ladder, ready to pull the trigger immediately off the JP Morgan number. It's not really like that. It's not like retail sales this afternoon. Retail sales will be most likely way more significant an input for the S&P index to move off than these individual companies that are reporting. That would be my feel, right? So we'll see. It can be that these numbers being announced can shape and influence sentiment, and it might have an effect on the US Open, for example. But I wouldn't necessarily be... It's not like trading an economic data release. You know, it's not... The S&P isn't going to spike to test Wednesday's high off the back of this data. All right, so it might be that we drift low. You know, technically on the S&P, yesterday's high is interesting as a support level. You know, and so if you're questioning, should I go long off yesterday's high? You know, should I have an upside bias for the S&P today, given that so far we've had a positive bullish breakout? So should I have a positive view directionally for the rest of the session? And that question can be answered and influenced by these earnings reports. If all of these banks report bad numbers, well then, right, you should be expecting actually 21.32 as a support level. Actually, there's a chance we might break back below that. So I'm not going to go long at 21.32, for example. Okay? So rather than it necessarily being a pull the trigger, I'm in a trade immediately because there's going to be rapid, dramatic action, that's not the case. Sure, off retail sales later, maybe, but that's not the case here. All right. Okay, that's it. Earnings season wrap. If you have got questions, guys, I haven't had any questions in the room yet. If you've got any that you can think of, get them in there.